Welcome, everybody, to this week's Middle Class Investor. This is Seth Martin. It is Saturday, October 22nd, and we're looking at a 5-year chart of the S&P 500 that goes all the way back here to the lows in 2011. And you can see that we had this really strong run up for about 4 years, and then sideways for a long time, chopped down, and then we've grinded back up. And now what we're left with is kind of some action in between this channel that looks to be narrowing. In fact, it's narrowing even more than I've got it drawn here. It's narrow like that. Now, if I go to a daily, so let me go to a 9-month chart, and these lines that you can draw, I mean, they're very subjective. You just saw me change this one up here to bring it down a little tighter to that price action. But based on the way I've got it drawn, you can see that we're spending a lot of time slightly below the line here, below this line right here. So I would say as long as we're below that line, it's pretty bearish. There's kind of another line right along in here that the market seems to be respecting. So it could be that I just have this line drawn slightly higher than it should be. Maybe it should be drawn down here. But for now, I'm going to leave it right where it is. You can see that what this means here, this hollow red candle, what it means is that the market opened down from the close. The close last week was right here. Let me just draw. The close last week was right there. So it opened down, ran all the way down here, and then ran all the way back up here and closed basically where it closed last week, which is very interesting. You don't see that a lot, really, but I thought it was pretty interesting. I don't know. It's really hard to say. It's almost like the market, and I'm sure other people share this feeling. It's like it's waiting on the election. I don't know what the election is going to tell the market that it doesn't already know, but it could just be it's looking for some sort of catalyst, to just get off dead center. I'm not sure, but certainly it appears to just be hanging out, right in here. You can't really say it looks bearish. You can't really say it looks bullish. It's just hanging out. So let's look at volatility. Volatility is really low. And the thing about volatility, let me go back to a weekly chart. The thing about volatility being low for so long is it just can't be that way forever. It eventually has to rise, and you can see here we've kind of been holding a trajectory right around in here. So if that trajectory holds true, then maybe we see volatility expand a little bit this upcoming week. Maybe we don't. Maybe it continues to fall. So it just says there's a lot of complacency in the market. Complacency in the market is usually not good. It's usually followed by non-complacency or fear. So we'll see what happens. We've got, I think, what could be a little different this week, and we'll go to it in a little while here, is that the euro definitively now looks like it's through its pattern and it's starting to turn down, and will probably result in new lows, and that could force the dollar higher, market lower. So we'll see. Let's go to the treasuries. Let's go look at the 10-year treasury first. Treasury yields, had a pretty good run here the last several weeks. As you can see, everything's at the bottom of the chart this week, so it's kind of weird. As you can see, treasuries have been going up now for several weeks, and we did break out of this downtrending channel, which could mean bullish. To me, it looks like it would need to go a little further. For this to be bullish, it would need to go a little further and then work its way back down to this to retest this channel line. But it could go and test it from here, but it just seems like it needs a little bit more conviction, I guess is the right word, coming above this channel and then maybe a pullback. So, if you've been listening to me for any time, we thought this was going to be the low, and this was going to be the first move out of the first low, and this was the pullback, and then boom, it doesn't look like that well, it's definitely not going to be the case, mainly because this week right here broke that low. So that started the count or the series or the pattern. Basically had to start over because of that. So now we're looking for a first move out, a pullback, and then a big move out. So really thought that was going to be the low, but just wasn't. So and this might not even be the low. So we'll just have to wait and see. But I would like to see this pull out a little higher, maybe up here to around 2% yield, and then a pullback to retest the channel line, and then a move out, maybe up here to 2.5, 2.6. And then I think from there we can maybe say that yields are done. If you were to look at bonds have a very similar, it's just an inverted picture. See, that's basically what bonds look like. So, bonds, when bonds go down, yields go up, and when bonds go, when bonds go down, I'm getting confused about yields and bonds are inverse of one another. So if bonds are up, yields are down. If bonds are down, yields are up. So we've got kind of a similar looking thing happening in the bond market, but just the opposite. All right, so let's go look at some of these foreign markets. I think the foreign markets are even weaker. Here's Germany, that's the United Kingdom. We got Japan. Although Japan's printing money, monetizing debt, so you could see Japan get up into this area, maybe around 13.75, 14. But I think it's just a matter of time before Japan rolls over too, because what Japan is doing will never work, and it's just a matter of time before the market basically lets them know. Germany is respecting this channel still. Nothing new to report there. If we go look at the dollar looks decidedly different all of a sudden over the last several weeks. It's looks much stronger than it has been, and you can even see this is like steepening. See that right there? So I think the next stop for the dollar is probably somewhere up in this area, off above this pivot. So maybe somewhere in here. So it looks like we got plenty of room to go in the dollar, which coincides with what's happening in the euro. And let me pull the euro up so you can see that. Here's the U.S. dollar euro, and you can see here the pattern. Looks like it's complete, and it's starting to go this way as we've got drawn here, and probably headed for parity or something fairly close below, certainly below here. It could just go just below here to like 104.30 kind of area, but a lot of times it'll go in these cases. Let me move my box down a little lower. You can see where I've got it drawn here. It'll go into maybe this 102 area, 102.50, and then we'll get a pretty strong rally in the euro after that. Let's look at oil. Oil, been all kinds of predictions about oil and industry experts commenting on oil, and you can see here that all it's done is gone right back up to the box where we targeted oil in the first place. I haven't moved any of these boxes, so I guess technically you could raise the box a little bit because we have a new pivot here. So there's a pivot, right here that we would draw off of. So, maybe oil gets in here into the mid 50s, but certainly this is counter trend to this move here, to the larger move, and oil starts running into a lot of resistance right into this area around the mid 50s. So I wouldn't expect oil to go too much higher here. It might go another $5 or $6 higher, but that's about it. Let's look at gold. Gold had a really sharp pullback a few weeks ago. We've got kind of a relief rally, which is very common, after you get a really strong move like this. You probably see gold go a little higher next week, and maybe then the week after start heading down again into this area right here. And then likely, or maybe even lower, maybe we go all the way to this pivot. There's a pivot right here. So maybe we go, to this box below the pivot, but certainly it's at least going a little lower next week below this pivot. I say next week, over the next several weeks. And then, the longer term forecast for gold, which is, I say forecast, that's not really something that I do, but, we do have this really, what you got to see in gold is that this pattern is very, very big. You're talking back from 2000 to 2011 run up in gold, and this counter trend move is relieving that. So we could see gold go a little higher and then finally pull back ultimately into this area down here below this pivot. All right, let's see. Let's look at what else do we want to look at there? We looked at the dollar, looked at gold, looked at oil. Let's go back over to, I got a chart of the global Dow. So this is the global Dow Jones Industrial Average. And you can see that this right here, it looks to me like, whoops, I take that off. Looks to me like this is the primary direction of the move, and that this area right in here is counter trend to the move. And you can see it's got that patented looking rising wedge, and usually what happens is this pattern completes by going back to the origin of where it started, which is way down here. So, and it could actually go lower, but it would at least go down to here. So you've got potentially a very large bearish situation happening in a global Dow, which again would come down to at least around here to the mid 1900s, but maybe potentially even lower down here to around 1550. So there's a lot of global forces going on right now pushing equity markets lower, and the U.S. market seems to be just the last holdout. So and I guess that'll continue. Let's go back to the S&P 500. That could continue until this pattern is complete. So right now, to me, this doesn't look complete. It looks like it needs to go, like to there. There's a pivot right here. And so we've got to be above that pivot, which would take us to somewhere in here. So, but that doesn't mean we couldn't go lower first. I mean, we could come all the way down. It could come all the way down into here first, and then make its way up into this area. So, right now it looks like it's just hanging out. It doesn't look. This is why before on previous episodes we were talking about reward to risk. Yeah, it could go here, and maybe that makes you 6%, but down to here or down to here could lose you 10 or 15%. And so these are the types of things you have to think about in the market. You don't really know where the market's going to go. All you know is what's likely to happen, like where the latest pivot is, where the market's likely to move to. And then you look at the distance between the pivot that it's likely to move to and then the pivot it's likely to move to in the other direction, and you ask yourself, is the reward worth the risk? And sometimes it is, sometimes it's not. And I think we're in a place, and we have been in a place now for 1, 2, 3 weeks, probably, maybe 4, 3 weeks for sure. Or this might be a monthly chart actually, because it seems like we've been there. Yeah, this is a monthly chart. So for the last 2.5 months, we've been in a place where, the reward to risk is probably not there. If you hang in there long enough, you might get rewarded with 4, 5, 6%, or you might get burned with 15. So it's just, that's the nature of the market, and that's the game that everybody signs up for, whether they know it or not, when they enter the markets. So, all right, everybody, I think that's about it. There's really not, other than the euro and the dollar, there's really not anything, terribly interesting happening right now in the market. But I would pay close attention to the dollar and the euro over the next several weeks. I think you're going to see new lows in the euro and new highs in the dollar. I think that's where we're headed. And to the extent that impacts the market one way or the other, you could see something happening here with this pattern. All right, everybody, thanks for coming in this week. Appreciate it. If you have any comments, just feel free to make them here on the YouTube videos. You can always comment at Middle Class Investor on Twitter, at InvestorClass. It's the @ InvestorClass. And until next time, appreciate you coming in. Bye-bye.